Hello, Uncle Jim here. Earlier this month, I actually rolled my 401k. This is a 20-year-old 401k into an IRA at Fidelity, and I started selling options on it. I've been doing really well with it, so I want to share with you today why I did that and how I'm actually doing. So stay tuned. I think you're really going to enjoy what I have for you. Okay, let's go ahead and jump right in. I typically like to give a quick market update. I don't really think the Fed's going to increase rates with the fact that the 10 years gone up so much recently. The inverted yield curve is almost coming under control. I believe the 5-year or the 2-year is still a bit higher than the 10, but nothing like it used to be. And I think that's causing a lot of headwinds with companies, especially companies that have a fair amount of debt. So I'm under the belief that they're going to hold steady in November and hold steady in December. Some people are beginning to think they may increase a quarter point in December. I personally don't think so. I think they're going to continue and probably not decrease anytime soon. I'm thinking probably the first time they may cut rates is midway through next year. I do think we're having a soft landing, but that could change in a moment. In the sense that if something significant happens, we could definitely go into a recession. But I personally think we're going to have a soft landing. So that being said, let's jump into the main information related to the video. I did a video a couple of weeks ago that compared. I looked at my 401k, which I had kept in Fidelity for the last 20 years, and I compared it to one of my IRA with options to see how they did. And I actually have a video dedicated to that. I'll have that above or in the link or as a link below in the description if you want to take a look at that video. But long story short, I found that having an IRA where you're selling options, you can do a lot better. So that's what I decided. I decided to go ahead and roll that 401k into an IRA. Now, originally I was thinking I was going to bring it over to Schwab, but I decided to keep it at Fidelity for now, primarily because Schwab doesn't pay really good interest in your accounts where you're trading options. You know, you have to keep some cash in order to trade options. By default, Schwab doesn't pay that much interest. I think they pay something like 0.45%. And Fidelity, my understanding is it pays close to 5%. I think it's 4.98. So I'm testing that hypothesis. I've had other members in my community say that that is true. So I'm just waiting for the first monthly statement since I've started trading options in this new IRA at Fidelity. I want to see that interest actually show up and get a firm understanding. I've worked with Schwab for so long, I really don't want to move all my accounts, but when you're talking nearly 5% interest versus 0.45, it's significant. And when you need to keep a lot of cash for trading options, it can be, several $100s on a monthly basis. My hope is they actually change that they actually start increasing what they pay interest rate wise. But currently the people I've talked to, the support people, don't see anything like that happening on the horizon. Again, I'm hoping they will change that if, in fact, it does turn out that they're going to keep that 0.45% compared to a 5%, because it's almost a no-brainer. You've got to move your money in order to get that higher rate. So in my future videos, I'll talk more about that. And I'm currently sharing all this with my membership. So that's one of the main reasons I didn't move it over to Schwab. I kept it at Fidelity and opened up a new IRA at Fidelity. And I was really surprised with their support. I've gotten so used to such good support from Schwab, and I got almost as good, if not better, support from Fidelity. They actually took control of my screen. They couldn't click on anything, but they walked me through the process. They made sure that I opened up the right kind of account, that I was set up correctly to work with the kind of options that I want to work with. I believe it was level 2 where I could also do spreads. And it was a real easygoing process, and it occurred really quickly. I believe I started the process at the very beginning of October, and within a couple of days, my funds were moved. I did liquidate all the Fidelity funds from the 401k. It almost sounded like I could move those, but I did not want to move those. I wanted to literally sell options. So currently, everything was moved as cash. I'll share at the end of this video some of the trades I've done this month and where it currently stands. I'll also talk about how much is in the account, because it's a real good way of really seeing what true returns you can make with this kind of an account. And then, so at first, since I only have cash in the account, I'm only doing cash secured puts, vertical put credit spreads. Primarily, once I start owning some stuff gets assigned to me. Because with the cash secured puts, I'm actually doing the wheel, meaning I'm selling a put. Hopefully it gets assigned, then I'll sell a call, and then it may get assigned again, because the fact that it's in an IRA, I don't really worry about taxes. So I'm going to be doing the wheel once stuff starts getting assigned to me, then I'll actually start selling covered calls too. But currently it's just vertical put credit spreads and cash secured puts. And I'm sticking to the same guidelines I had before, with the exception of the wheel trades that I am doing, since we're kind of, I believe, in a low point in the market. I am doing a little bit more risk with my wheel trades. So I am taking, I'm doing more like a 30 delta on those particular trades, mainly because I do want to get this account funded fairly quickly. So I'm willing to take a little bit more risk. Once I do have it funded and say 1/2 to 2/3 are in stocks or ETFs, and the rest is in cash, then I'll go back to strictly doing like a 15 delta with puts compared to what I'm doing now. So I just wanted to share that, since I am, changed the way I do things a bit. And then all the other guidelines, I am looking at shorter expiration. So I'm doing more like 30 to 60 day expirations. And a lot of my other trades I've done longer, but I'm primarily trying to do 30 to 60 days. That way I can literally probably repeat the trades every month and have a real clear picture as to how much I'm earning on a monthly basis. Another important piece of this was setting goals. So I looked at how I did in that IRA with options that I've been trading since 2022, and I picked a fairly safe goal. The goal is like right around a little bit more than 1% on a monthly basis. And so far, the trades I've done in October, I've been able to meet that. And I'm going to go slow and steady. I'd like to increase that, maybe do more like 1.5 to 2%, possibly. But like my other accounts, I'm going to take it slowly, and I'll increase it and hopefully do a much higher return, and maybe even try some new strategies with it. So again, my goal is slow and steady, and picking the stocks and ETFs that are really good. In the past, I've made a few mistakes. So I have changed the guidelines with picking the companies. I really look at the debt. I really look at, what are their earnings going to be next year, and going into the future, what kind of industry stuff is going on. Like consumer staples are going through a rough period, but long term, they're going to do well. And I also look at dividends. I still like companies to pay dividends. I also want this account to be paying a nice dividend, and also looking at companies that are increasing dividends on a steady basis. A lot of the same kind of trades, meaning the same ETFs and the same companies I'm looking at for this account as I do for my other accounts. So that's the primary emphasis. And I've been really surprised with how well I've done so far in October. I still have another whole week, and I've already come close to meeting my goals. So let's actually jump into the next part of the video, where I'll share with you a new planning worksheet that I've set up just for this account. It's kind of my IRA plan. So stay tuned. Let's jump into the next part of the video. Okay, now before I jump into this new spreadsheet, please subscribe, hit that like button. If you're curious about my memberships, details will be below. I've had a lot of people joining recently, and I've had some really good discussions, so might be well worth your while to take a look. So let's go ahead and jump in. Now, this is, again, a pretty simplistic spreadsheet that I set up. At the top, I've got the account value. So this is the account value when it was transferred into cash. It was $217,827. And here's my weekly goals. I'm trying to get 600 or make 600 in premium on a weekly basis. Monthly would be 2,400, and then that's like 1.1% on a monthly basis, which is really close to 14% a year. And these are my starting goals, so I'll probably change them over time. Hopefully I'll be able to do better and I can increase them. But I want to minimize risk. I don't want to put this account in jeopardy. And I don't think I'll have to. I can literally stick with really safe ETFs and stocks. Steps that I took, I rolled it from a 401k to IRA. Again, it was a real easy process. Fidelity had really good support. Actually, like I said, connected to my workstation and actually guided me through what I needed to do to get the account set up. And then everything was funded. The assets were liquidated and the cash was moved over. And you can see I did my first trade on October 3rd. So literally within a couple of days, everything took place. Now, I believe from everything I've been able to check, I don't know why there's a Z there. My understanding is this account would earn 4.98% on a monthly basis, and that's any cash that's sitting in the account, even if I have cash secured puts or vertical put credit spreads, it would earn the 4.98. There's no, unlike Schwab, there's no need to move it to a money market account or a fund that's a money market account. I can literally just leave it as is, and that's what it would earn. Now, for initially funding, my goal is to have 20% in SCHD. And then I'm going to do probably 40% in SPY, IJH, IWM, IJR, VII, so different ETFs, and then 40% in others. Now, this may be like 2/3 of the account and everything else is in cash. So I'm still working through the details, but that's what I'm thinking. And these are the basic numbers from when I got started. Now I did my first trade on October 3rd. Now these aren't in a specific order. I just identified some of the stocks that I wanted to potentially own. So the first trade was, I did another IWM. It hit new lows and I was like, well, let me go ahead and trade it. And I did it 157, 147. I believe IWM was down this morning, but it's back up. I believe it's like 172. So this is already very profitable. It was at 18 delta. I made 211 expiring on 12/15. It's nearly a 60% return. This is the required capital. That's the premium I brought in. So I'm going to continue to trade on IWM. It's my SPY. It's what I prefer to SPY. It's fairly steady, and currently I've never had any that I've had to close early or take a loss with. Hopefully that doesn't change. Then the next trade was SCHD. Again, I want to own probably 300 to 400 shares in this account. So I'm doing it with a wheel. I did pretty near the current price. I did a strike of 70, and it's a delta, actually a really high delta of 44. The current price was 69.52, and the main reason I did that is it was paying really good premium. So I ended up making 310 in premium on that, which got me below the 52-week. I believe it's pretty close to the 52-week low on that. And here's the funds minus the premium, which is the required capital, and then 18.83% because it's expiring in November. So if that doesn't go through, I'm thinking it will, but if it doesn't, then I'll just run it again next month. My third trade was on 10/5. It was XLE. This one, I believe it was down for a couple of days, but I did a 75.65. This is similar to my other trades, closer to a 19 delta. I maybe should have done higher. Next time I may look to do higher because XLE is one of my favorite ETFs. It's the energy ETF. Currently it was at 85. I brought in 211 required capital, or I also call it margin. It's like a 40% return, expiring at 119.24. So I started trading in this, and as I've been trading, I've made some decisions, and that's why this is one of the only trades I did so far out into 119.24, which is pretty standard for my regular trading in my other accounts. But since then, I'm trying to stick to no later than 12:15. So then the next trade that I did was Zoom. I just like to do Zoom. This 55.45 has just been a cash earner for me. a 17 delta, 12.15 expiration. It was currently 64.70. I believe it got even lower than that. It may be like $63 currently. It brought in 213. 1786 required capital, and then almost a 65 or a little over a 65% return on a yearly basis. And you can see the calculation. It's just taking this divided by this, adjusted for how many days are in the year. So adjusting it for a yearly basis. In this case, since it was retiring in 67 days, it's 365 divided by 67. And that's how all the different ones are calculated. So those were my first two trades, and then I did another trade. So I'm going to jump up here to 1010, which is Corning. I did a 29 on Corning, and this is probably the one that will be assigned to me. I believe Corning's gone all the way down to 27, which to me is crazy. It's a great company, and it's doing quite well. Brought in 192. It's almost like a 31% return, 11.17. So this is probably one of the only ones that's in the money. Again, I believe it's 27.28. But that could change. I've had Corning, I think I've had cash secure puts with Corning in the money for a long period of time. So it may, if it's out of the money at expiration, it may not get assigned. I do want it to get assigned, though. I do like the company. I like the dividends they pay, and it's at a really good price. Next, I did a 1011. I did CF Industries, vertical put credit spread, 72.50, 62.50. So this is the other one I did going out to 119.24. I brought in 265. Here's required capital, almost a 55, 56% return. This one, second thought, looking back, maybe I should have done that as also a cash secure put, because CF Industries is another company I really want to own. So that was on the 11th. So the 13th was Qualcomm. I already have a vertical put credit spread, I believe 2 contracts in one of my other accounts at Schwab. But I went ahead because it got really low, 108.90. So I did 95.85 vertical put credit spread expiring on 12/15. Brought in 227, required capital 1772, and nearly a 75% return since it's expiring in December. And then, so that was the 13th. If we come back up, I believe we'll look at this one on the 18th with this IJR, and I did this earlier this week. Yeah, I did 2 yesterday, and these are cash secured puts. IJR is an ETF I really like. I've had them in my Schwab account for many, many years and done fairly well. Here you can see a 34, almost a 35 delta, expiring on 11/17. The current price was 92.31. And it brought in 264 in premium, and it's almost like an 18% return. So, and it's literally 11/17, so a shorter date. And then the last one I did was also yesterday, an EMN, a chemical company, good company. They were 73.31. I did a cash secured put expiring on 12/15. And brought in 219. And since it's a cash secure put, it definitely has a smaller return because it's based on the full amount of what's at stake. And this was one contract, so I got 219 for one contract. And those are the trades I did. And like I said, after I realized I don't want to go out as far, going forward, I'm going to only do 30 to 60 days out. Now the total for these is 21.16. So I'll probably do one more trade tomorrow and at least 2 trades next week. So I should easily reach the 2,600. I might be closer to 27 or 2,800. And again, setting up these goals. So if I can earn 4.98% just on the cash and then also earn close to 13%, you can see it's really hard to beat that. And I share all these trades with my members so they see these right away. I actually have a collection that's dedicated just to this new IRA, which was originally a 401k. So, and I'm going to do special videos on this, both in my membership, and then also I'll release some of them to YouTube as well. So that's it. That's what I wanted to share. As always, if you have comments or concerns, or you think I'm maybe not doing this correctly or have a better way of doing it, please leave a comment. I always try to answer my comments. I enjoy actually getting comments and responding to them. So thanks for joining me, and I look forward to seeing you next time.